Good afternoon, everyone. Welcome back. I trust you enjoyed lunch. It's time now for our panel on the digital transformation of banking and financial services in a new era. As digitalization reshapes the financial landscape, traditional banking and financial services are undergoing a radical transformation. The shift towards digital-first solutions isn't just a trend, but a revolution that's redefining how financial institutions operate, interact with customers, and manage risk. This session aims to provide valuable insights into the technological forces driving change and how financial institutions can strategically navigate this digital revolution to stay ahead of the curve. Our panelists for this session are Dr. Ahmed Alam, financial expert at His Highness the Ruler's Court of Dubai; Prasad Kambalekar, Regional Director of Banking and Financial Services, Europe, Oracle; Gregor McInnes, Chief Technology Officer at FinTech Galaxy; Tom Higgins, Founder and CEO of Goldeye; Dr. Dimitros Zamboglu, CEO, UAE Blockfills. And it's my pleasure to moderate this session. Welcome. Welcome. Lovely to see you all. Thank you very much for joining us. And I have to say, Prasad had a wonderful idea of starting this panel very imaginatively. He said, let us imagine it's the year 2050, and our speakers are CEOs of leading retail banks. If you would please introduce your bank, explain the channels, the technologies, strategy, target clientele, brand name, slogan of your visionary bank of the future. Share with us your visionary bank for 2050, please.
Well, I get thrown under the bus first. Okay. Hi, everyone. Great to be here. I was pondering this question on the way over here, and I was thinking back over the last 25 years and the difference in the technology landscape that's happened in that space. So it's going to be pretty much impossible to figure out what the technology stack's going to look like in 25 years. You know, what we're seeing today, the emergence of blockchain, the use of APIs as a primary communication method, this is the legacy of tomorrow. This is the things that we're going to be trying to digitally transform in 25 years. But irrespective of that, the vision that we have, and my founder, Mirna, at FinTech Galaxy, is all about financial inclusion. So we'll be building Finclusive, the bank that takes finances and makes it inclusive for everyone. So it's a primarily customer-focused bank that deals with underbanked, underserved demographics. What the channels will be in the future, I don't know. Probably chips in our head, AI talking to us, not sure, but we'll be there. We'll be making sure that those products and capabilities are available to everyone who needs them.
And it will certainly be Finclusive.
Indeed. I did check the domain name, it's already gone.
Great. Hello, everybody, and thank you for coming. So my bank is called Bank of Tom Oro. So it's a nice mixture of Bank of Dave and Bank of Tom Oro. And what we're going to be is we're going to be aimed at the global wanderers around the world. So people who are very literate in the world of business, but are not really interested in having to do lots of things with banking. So we're going to be using Neuralink, brain link that Elon Musk is pioneering now, and in 2050 will be standard for everybody. At birth, you'll have this thing put in the back of your head and you'll just be able to do your banking that way. And we'll be using blockchain, probably version 20 by then, I guess. And our slogan for our bank is "To think is to bank." So you will do your banking just by thinking of moving things around. And it sounds horrific, doesn't it? But I think that's my vision.
I'm sure Mr. Musk will be impressed with your idea.
Thank you, Ramia, for having me. Actually, since you start your panel with this amazing question, so I have to do my best to convince you and all of my competitors to join my bank as well. So actually, our bank, the FutureLink Bank, it's connecting dreams. It's empowering the financial future We are not just a financial institution. We are like an ecosystem that integrates the advanced technology with the customer-centric banking services. We are an artificial intelligence-driven bank that tailor our services for each customers, however it's an individual or a business. In addition to that, our services are highly protected based on the quantum computing protection or quantum computing protection services. We guarantee that our network is built on the green blockchain to guarantee the business continuity and also to guarantee that all of the transactions are sustainable. We're targeting the individuals and business who are seeking borderless banking services. We can also provide a special financing tools related to the initial coin offering, or as well we can provide something related to tokenization.
So similar to today's banking, with the exception of the lack of quantum and the lack of the blockchain, the green blockchain. Dr. Dimitrios.
Thank you for moderating the panel, Rania. And I think the name of my bank will be The Last Stop. So this is it. So this is the app that everybody will be downloading. It will be AI-driven. It will be agnostic. It will have a lot of cool features that go around rewards. So you will also make money from the bank instead of just paying the banking fees to hold your credit or your debit card. It will be more social. You will be able to connect with people, not just send money, but do other things. For example, charity is a big thing. So it will be as social, where you can do events with other people and get rewarded. And in this beautiful bank that I have in my imagination, KYC will be simple. So with your eye, with your aura, you will be able just to open an account. Thank you.
That would be a dream come true. And by the way, the bank that I use now, on the rare occasion that I need to withdraw cash from the ATM, it does request that I make a charitable contribution, and I always do so. So already futuristic banks in the UAE. Prasad.
Hi, everyone. I have a different view to this. From my perspective, banks will not exist in 2050. And let me explain why I'm saying that. So 2050 means 25 years from now, where we are talking about generation alpha and generation beta. Generation beta would be the younger lot, whereas generation alpha would be in their peak career time. Now, this generation has been born with already on the journey towards digitalization. They are living in the digital world. The generation beta will be absolutely into the AI world. So for them, this is an absolute norm. So what is it I should be giving to these guys where they want everything and everything now? So what I will have is a lifestyle service which will be embedded into the entire ecosystem, where every individual will be touching upon during the lifespan, be it going to the gym, be it talking to the friends, colleagues. So everything will be embedded, and this services will be kind of a seamless one, where entity as a separate entity like bank will not exist. So this services will be digital. AI definitely it would be the norm, as I said. And I would call it as IKEM, which is a Sanskrit word for identity. So this would be your avatar. So and the slogan would be avatar for your lifestyle. So it would be driven by your ID. So you won't be having a bank account per se, but your ID itself will be your account. Your transactions will be in cryptos. There will be something new by that time, I'm sure. So payments will be in a complete different landscape what we are seeing it now. So that is how I would see my bank to be in the market.
Wonderful. Thank you very much, gentlemen, for your contributions. Tom, I'd like to ask you to start about traditional banking. We know that it's being left behind by neobanks using smart technology. How can mainstream banks leverage technology to stay ahead in this game?
Yeah, it's interesting because banks' technology is generally, traditional banks, is very, very old because the banks themselves are very old. So their technology has been built on top of mainframes, of which a lot of them still use technology like that. So it's extremely difficult for them to change anything. And I remember once when I was working with a major investment bank, and they needed to install our software and they needed to open a firewall port, and so we requested this. And when it was eventually done, about 4 months later, I looked through the email trail, and over 100 people had to take part in the conversation to have one network port opened, which is ridiculous to me. So I think the only way they can really compete with sort of neobanks is to have the concept of like a parallel bank. So they start with the same money that they've got, which is the key thing you need as a bank. You need lots of money, and you need some technology and customers. So they've got the money, but they can't really build on top of their tech. So they need to start with a complete new tech stack from a software vendor and build a bank that's operating on that new stack so they can compete with the various different e-money systems around the world that are all non-standardized, and they can build something that is then fast, flexible, and ability to change in less than 4 months and less than 100 people. And then you'll find they need far, far fewer people, and they can offer much more flexible services.
And Dr. Dimitrios, how do you see the evolution of financial services regarding things other than charitable contributions and social media aspirations?
I believe technology is playing a very big role nowadays. Technology comes as an enabler. So you are able to have access to services that you wouldn't have in the past. So whether there is a decentralization and DeFi and all of these kind of services, this will be something that will play a very big part in our everyday lives. Then you have the element of AI. So many of the things that you were doing in the past and you were struggling with, now they are becoming more and more easy. And then ultimately, you will have access and reach to more people. So with the use of technology, financial services can even go much, much further where they are. And this comes to the word of inclusion. So everybody will be able to be included in this new financial services, this financial services 2.0.
Prasad, as a global leader in banking, what are the top big 5 trends you see in the banking and the financial services industry?
See, banks being technology-driven entities, so there is a very similar trend where in terms of the trends for banking compared to the technology part. But let me quickly focus on the 5 key ones which I see from a business perspective. One is surely the explosion in the retail banking. And again, why that has happened after 2008 crisis, lot of neobanks, fintechs have started coming up with a excellent customer experience and digital solutions offerings. So banks have to catch up to that, and especially with the pandemic, it accelerated the whole growth. So there's a lot of huge focus on customer experience, bringing a seamless experience for the end customer. So that is one. Second, I see still it is evolving. It is in the space of corporate banking, where the huge focus is right now on retail. Corporate is not left behind. There are still legacy solutions in the corporate side, which are corporate lending, which is particularly liquidity management, virtual accounts. Are the areas where really picking up on the corporate side. Third, I would say, is around the regulatory things. Now, regulators have always been quite stringent, especially I'm talking about the Europe market. And with that, there is a lot of stress testing banks are doing on their own to ensure that the regulatory needs are met. And regulators, in turn, are also getting quite stringent with the new policies coming up year and year again. Hand in hand with regulation, I would say, cyber security is the fourth one, which is again very much in trend. Again, because of the new technologies like AI, Gen AI, there are a lot of focus on ensuring that cyber security is top notch in terms of the investments banks are doing. And the fifth is, I would say, on the financial crime side. Now, if you look at the overall GDP, where 100 trillion GDP globally, around 2 to 5% is actually lost on these financial crimes, where that money is kind of used in money laundering, a lot of criminal activities. So apart from governments, but banks are also focusing to ensure how they can completely control this financial crime area, especially bringing right tools from AML perspective and all that. So these are the 5 ones, I would say, from the business side.
So many critical subjects there. Now, Dr. Ahmed, I'd like to know what you think the main impacts of the digital transformation is on the financial markets.
Sound great. Actually, the digital transformation, it's considered like a game changer in the financial market we have. We never expect, or we cannot see the financial market we have nowadays without the digital transformation. It's playing the major role for everything we have. However, from the type of the investors, the asset class, the operation related to the settlement, related to the transactions, to everything related to the transactions related to the financial market at all. So from the operational perspective, the function and the process of the financial market become more efficient. Mainly it's because of the digital transformation, or as well the cost reduction we can observe nowadays related to the financial market. Without the financial transformation, we cannot see this deterioration of the cost, or this cost reduction related to the settlement and all of the transactions related to the financial market. As well, because of the digital transformation, we can see the booming of the type of the investor included in the financial market. We start to see type of investors we never expect that they could penetrate the financial market before. However, from the gender, from the generation, from the age category, all of that, it's because mainly the digital transformation. The asset class we have at the moment, we have a digital assets, something related to the cryptocurrency, and something related to the NFTs. All of these asset class mainly based on the digital transformation. From the security perspective also, and the amount of fraud, it's reduced dramatically. And also we can consider that the digital transformation enable us to predict the customer or the investor behavior, and give us an indication on what is the next step the investor can take in the future based on historical data. Also, we can talk about the regulation. There is big steps taken related to the regulations. Nowadays, we can observe a lot of milestones or advancement related to the regulations to be able to handle everything related to the development and enhancement based on the technology we have nowadays.
And Gregory, you mentioned earlier that your Bank of the Future would be inclusive. How can we ensure that customers aren't left behind during the digital transformation?
It's a very important point. Tom mentioned earlier the resistance banks have to change due to the amount of legacy and risk that due to the legacy and the amount of risk that's involved in their systems. I used to work with RBS back in Scotland. It was founded in 1757. They've been building legacy systems since, the 1800s. I guarantee you they've still got active accounts on the big ledger in the basement that they're still servicing today. Digital transformations way too often become in banks about the governance and the risk mitigation involved in making those changes and protecting the bank and its systems. And they continually forget about why they need to make those transformations in the first place. And it's the customer. How do they better serve the customer? Banks will make money regardless of the environment, the times, what else is going on in the world. but they need to keep feeding and watering their customer base to make sure that they continue coming back and wanting to bank with these entities. So a customer-centric focus. One of the things I've challenged my team with at FinTech Galaxy is this year to question everything with why. Why are we doing this? Why do we want to continue doing this? Have the decisions we made in the past still fit for the future that we want to see from our products in the marketplace? And that's the kind of thing you need to do during a digital transformation. You need to be able to continually step back and say, we are still on the right track, we are still meeting the requirements of what our customers and our future customers want, and we are still making the right changes in the right places. So try not to focus too much on the technology. It's not technology for technology's sake. It needs to be adding value at every stage of the process.
Absolutely. And Dr. Dimitrios, tell us about some of the customer-centric innovations that will ensure that customers are prioritized during the digital transformation.
I think first we need to go back and understand who is our customer and what does the customer want to see. Then we will be able to turn all of this information into what I call personalization. So you can create different personalized journeys for different customers. And now that AI is taking a big role in this, what used to be called gamification in the past, now this kind of personalization can be constructed on a journey per journey basis. So every time a client will log into his account, the customer will log into the account, the journey can be specified according to what his expectations are. And AI enables these kind of journeys because it's mostly a probabilistic way of creating such experiences. And then we will see this personalization taking a whole new dimension. And this will be very, very nice because even if you're using the same app, you will have a different journey of someone else. So this is like a tailor-made product for yourself.
Let's talk a little bit about crypto. We've all been seeing Bitcoin go over 100, and now it's at about 96 probably, but all because of Trump's crypto-friendly government. And Tom, I'd like to ask you, how can traditional finance firms get in on the act, on the Crypto Act? Is it too late?
It's never too late, and crypto is one of the most most exciting subjects at the moment. It's a little bit like foreign exchange was maybe 20 years ago. It's a really exciting time. The first things we need to get is proper regulation everywhere globally because it's still really patchy. You know, MiCA's here or nearly here. UK regulation is not here. The US regulation, who knows what's going to happen, but we know that Trump is very pro-crypto. And I could call him President Musk, I think, probably reasonable. He's a proxy president anyway. And he's very pro-crypto, obviously, some of his meme coins. But so, yeah, exactly. So what can they do? Well, first of all, once we've got regulation in place, they need to have good access to good liquidity because you can't just take liquidity for crypto from anywhere. You can't take it from a source that's predominantly FX and has got a little bit on the side, of which there are quite a few, because the quality of the liquidity is not good enough. The liquidity is not deep enough. The number of coins isn't good enough. And the spread probably won't be tight enough. So what we're seeing, and with our software, our matrix net aggregation software, is there is a whole demand for the prime of prime concept in crypto that exists in FX for a very good reason, because you probably don't want to, end users probably don't want to paper directly with market makers because it's complicated. They probably don't, a lot of them don't want to paper directly with prime brokers because they're too big. And so the concept of a prime of prime is really important, and we're powering a number of them. We're seeing a few of them appearing where they are fronting the liquidity from multiple market makers, exchanges, and using the services of prime brokers like Hidden Road, LTP, etc., and offering that liquidity out in a standardized fix or WebSocket format. So by doing that, and with the regulation in place, then you've opened up the world of crypto to anybody who can connect to it. Because I don't believe you will have separate front-end trading platforms for crypto. I think you will have a common platform, a common order management system or portfolio management system for every asset, and you will just have different execution management systems that you connect in for the different asset classes to execute them in the best way. So this is all new, this is all happening, and this year I think Trump will make this happen.
Well, he does say he wants to make the U.S. the crypto capital of the world, so let's see what happens there. Prasad, you have a lot of experience working with banks and with fintechs in the UK and Europe. What are the key disruptors you see for digital transformation, and what are the differences between the European market and the MENA market?
Interesting. So, see, the key disruptors are again driven from the expectation from the end customer. Now, predominantly started with open banking. Open banking, I would say, was the first disruptor where interfacing with bank to bank absolutely started. AI is a big disruptor, and I strongly believe in that. With AI, again, it is advancing towards the Gen AI, and predictive analysis around that. That is the one. Cloud is picking up again, not because I'm part of Oracle, so I'm saying, but yes, cloud is something which is going to bring a lot of operational efficiency and agility to the banking operations, helping improve the cost. Third is, I would say, around the regulatory RegTech area, where because regulators are getting more and more stringent, there is huge technology around regulations which needs to be ahead of the race before what regulators will be going towards. And last not but the least, but I would say is your next generation the things like crypto, what rightly Tom said, is something, and especially I have a lot of hopes from US government now, again because of what US is doing is, and after Trump is there, they are going to kind of ease a bit on the regulation on financial services and oil and gas. Now, if you stick to financial services, definitely if the regulation is bit kind of relaxed, crypto will pick it up. With crypto, a lot of Gen AI solutions embedded into that will pick it up. So that is going to be the big disruptor for the market. Now, if I compare between Europe and MENA market, three key distinct, I would say, differentiators I can see. One is the infrastructure. Europe has much better infrastructure as of today. MENA market has it, but it is kind of in pockets, not across the market. It is the same infrastructure. So infrastructure needs to be bit focused more on MENA market. Second big change, which whenever I cross through this market, I see that regulation or regulators needs to be much more stringent in this area. Europe has a lot of strong regulation, GDPR, but sometimes it slows down the market. That is the cons of it. But here the regulation is still a bit relaxed, which actually are increasing, helping increase the cybercrime. So that has to be got in control. And the third is the ecosystem or the R&D which Europe market has available for the fintechs, neobanks, or the startups coming up is phenomenal. Look at the markets like Baltics market, UK market, Bulgaria is coming up. So Cyprus is there, which is kind of an absolute great hub for the startups and the neo and fintech banks. So these are, I would say, the three common differences. But having said that, both the regions are focusing towards customer experience and growth towards that.
Just very briefly, as a follow-up, I mean, the MENA is a huge region and it's very diverse, and the regulators are different in North Africa and the GCC and the Levant. So would you say that the regulations are loose throughout the entire MENA, or is it variable?
No, it is variable, I would say. Some of the areas are really good, but as you rightly said, because the region is pretty huge, so I can't compare Africa with Middle East. So that is the kind of a difference.
Dr. Ahmed, tell us, if you would, about the impact of AI and machine learning on the digital transformation, in banking in particular.
Perfect. Actually, once we discuss about the banking sectors, especially during the last few decades, we can observe that the banking sector is shifting from one side to other side from milestone to other milestones in very huge differences. We moved from version 1.1, 1.0, 2.0. Now we are experiencing version 4.0 from the banking in the banking sectors. We moved from the physical paper and the physical record. Then we experienced the NCR system. Then we shift to the computerized operation. After that, we start to have the mobile banking, and nowadays we have the digital banking. So the banking sectors keep shifting from one to others in very rapidly change. From the artificial intelligence and machine learning playing very significant role in the development of the digital banking from different perspectives. If we talk from the risk management, they are playing an important role for the KYC. From the also we can talk from the checking the credit worthiness of the customers. In addition to, if we talk from other perspectives like personalization, now we can find that a lot of personalized products provided by the digital bank to the different customers based on their financial position, based on their credibility and all of that. If we talk from we can talk from other perspective like decision making. Machine learning play very important role that it can predict what is the next steps of the customers, if they going to experience a default, or if they are need for a loan, for example, so they can predict this in advance. So all machine learning and artificial intelligence are a significant role also in the fraud detection. The artificial intelligence based on all of the transaction or the screening that make through all of the transaction, they can give an alarm or give red flags on any fraud that could be occurring on the cycle of the process or in the digital banking as well.
And as we know, financial institutions are increasingly opening up their systems to third-party providers. And Gregor, I'd like you to tell us about the role of open finance in digital transformation.
So the open finance regulations as they're rolling out across the region are really making the incumbent banks think about how they want to play in that space, how they want to present themselves to the market, to the new channels, to the new opportunities. It's a catalyst for that digital transformation. It's making a lot of them think about what their strategy, their near-term, their future-term strategy should be. It's a very interesting space at the moment. It's not new in the world. You know, we've seen it happen in Europe. It created its own market in the US. But here we've got some really forward-thinking regulators, specifically in the central bank in the UAE, creating an easy-to-access hub for all of the banks and LFIs to hook into. That accelerates the adoption of it. It gives them that easy step into that digital facade for their transformation, and allows them to start thinking about the value add that they can create customers and for the market, how they can stitch all of that together. So the role of that in the digital transformation world really is the catalyst, it's the accelerator, and the way that these banks can prove to their shareholders that digital transformation does have value for them.
Tom, tell us about stable coins, how they are revolutionizing value transfer globally, and just give us a short explanation on what stable coins are, if you would.
Well, stable coins are great. So stable coin is a little bit like Bitcoin, but unlike Bitcoin, it doesn't change much. It's almost entirely pegged to another currency. So if you have USDT, for example, listed by Tether, it's almost exactly the same value as $1. Now, occasionally you'll get a stable coin that depegs and goes completely mad. as UST did. But the
Is
idea
that
of
the Terra coin? Sorry to interrupt.
that was the Terra coin, yes. So you've got USDC and USDT are the main ones used today, so Circle and Tether. And they are almost exactly the same value. So what it means is that you can send money around the world without much risk of losing value. And they're incredibly useful because it's a global standard blockchain, and so you can quite happily send money from anywhere in the world to anywhere else using this standard. Now, this sort of ability to go around a banking system to move money has been adopted in lots of parts of the world. So in Africa, you've got M-Pesa, which is incredibly popular, which was, I think, started by Vodafone. But the advantage of a stablecoin is it's a standard. So if I want to send some money to somebody in Africa, India, anywhere, it's the same standard. I can just pick the stablecoin, pick the network to send it on, and I send it, and literally within seconds, it's there. So it's the standardization that's so good. Now, they are not owned by governments, they are private, and so some governments get concerned about them, but actually the risks involved in using a stablecoin are considerably less than the risks in sending something to, say, Africa or India, where I don't know the banking system and I don't know it's going to arrive.
But the recipient will inevitably need to transfer the stablecoin into their local currency. How does that work?
Yeah, so you would use an exchange. So you'd use your local exchange once you've got it there. So if somebody sends me some USDT, then I need to convert that back into GBP or USD, and I would use a local exchange to do that, of which, because it's a standard, there are lots and lots around the world. So that's not really a problem.
Dr. Ahmed, how do you see the evolution of payment systems, and what does the future hold in terms of innovation in payments?
The payment system actually goes through a lot of process. Since long time, we start with bartering. Then we go with the commodity payment. Then we start to experience the coins. Then we start to move to the banknotes. And recently, during the last few decades, we start to experience the wire transfer and the electronic fund transfer as well. And nowadays, we have the online payment. However, through the application such as PayPal, or even the mobile wallet, which is become well known for most of us nowadays. The statistics refer that most of the commerce or retail commerce is done by the mobile wallet. It's almost 55% of the retail commerce nowadays is done by the mobile wallet, while almost 35% is done by the plastic money, which is debit card or credit card, and the minimum amount of the transaction of the payment is done through the cash. So it's very clear that we are moving toward the digital payment as we move, and it's coming so fast. We're going to experience the cryptocurrency payment. It will become so popular once the cryptocurrency become more stable, and once the government start to establish and develop their cryptocurrency digital or central bank digital currency, it will become so popular for all of us to use the payment through the cryptocurrency. In addition, also we now have the wearable payment through the smartwatch or even the ring, which is equipped with the payment methods or payment application. So it's become so popular, and it keep moving toward more advanced payment technique, and it will become so normal for us within the coming 5 years to experience the cryptocurrency payment, especially once it's agreed and it's organized by the central bank in every government in the world.
And GCC central banks have been quick to develop their own CBDCs, haven't they?
Actually, they are working on it at the moment, and even there is some kind of agreement to develop the GCC digital currency, so they can trade between all of the GCC country without the barriers of the currency exchange.
Fantastic. Dr. Dimitrios, so what future trends do you anticipate in the payments landscape?
I think you already said it, CBDCs will come. And Tom said a very, very nice definition of how stable coin works. So if you can imagine this on a bigger scale, on the country scale, then CBDCs will be part of everyone's life in the near future. I'm sure, as Dr. Ahmed said, there is big working groups now working and trying to solve this problem of how the technology will be built, how they will show extra transparency, especially with this kind of technology. Then the other thing I see is quantum computing. 5 years ago, a friend of mine left his company, BAE, to work for a quantum computing company, and I found it to be a little bit risky. But now we have seen big organizations like Google are doing a lot of marketing announcements, and they're saying that quantum computing will change many, many things. So quantum computing will come and it will try to solve a lot of the problems we have. It will add a lot on efficiency and effectiveness, and I hope it will bring more good than bad in this planet. And then lastly, I will say ESG. ESG is something that we all need to work more on that and make sure that this planet is safe. And again, in the UAE, I'm sure there is a lot of things happening on the ESG side, and I'm extremely proud to be in this region. And with all of that, I see a future that is very, very good, to give just a simple
Wonderful.
word.
I appreciate your optimism because we have 30 seconds left, and I just want 10 seconds from each panelist, please, to tell me what the biggest challengers or barriers are in the way of digital transformation.
Legacy thinking and legacy banks.
Pardon me?
Legacy thinking and legacy banks.
Did our audience understand? Is it just me who can't hear?
The Scottish accent, sorry.
I'll translate it to English. Legacy banking.
Legacy banking. Thank you, Gregor.
I would say it's regulation not keeping up to date.
Uh-huh.
I believe the regulation, because there is no standard regulation who govern this, so it will become so obstacles against it.
Dr. Dimitrios.
I will say human control. We still believe humans can control everything, and I think this is definitely a barrier.
Prasad.
I would also go with regulators. So regulation is the number one.
Fantastic. I wish we could chat more, gentlemen. Thank you so much for your contributions today. Really fascinating conversation. Thank you.
Thank you.